Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Hello, and welcome everybody. This is Wealth Coffee Chat, and happy Monday. Hope you're doing really well. My name is Megan Wolfenden, and I am one of the coaches here at Positive Real Estate. So I help people create wealth. That's what I do every single day. So today I decided to talk about how we find capital growth property. So capital growth property, very important as part of our strategy, because of course we can't save ourselves wealthy. So that capital growth so important. And today I just thought I'd go through 3 factors that are going to affect a capital growth. We're going to start with, good morning, Chris. Hello. Good morning, Sonia. Hi, good to see you. I almost did a presentation for you, Sonia, talking about kids and getting them into real estate, but I decided capital growth was it for today. And so we're going to talk about 3 things: macro factors, micro factors, and then niche. Because what we want to do is get into a market that is not only going to, join the rest of Australia in capital growth. We want to get exceptional capital growth. So how is it that we create or build a portfolio that has exceptional capital growth? So I'm going to start a macro factor. And these are things that are affecting us at a high level that are showing whether our property is going up or going down. So, of course, some of the things that affect us at a macro level are migration. Australia grows its economy through migration, and consequently, that is increasing the value of our property because there's less supply, high demand. So migration will always be important for Australia for building its economy, and that's going to affect our property prices and capital growth. Next thing we've got is global issues. Australia is seen as a very safe place to invest. That is bringing investors from overseas and, of course, adding to migration. And what about government incentives? So I had a quick look at just some of the first home buyer incentives today, and there's a lot. We've got the first home buyer shared equity scheme. We've got the first home super saver. We've got stamp duty concessions, first home guarantee to reduce your LMI. It goes on and on. These government incentives are putting more people into the market. Again, high demand and low supply. Interest rates. Well, it turns out that we've proven that Australian property will go up even in a high interest rate or a growing interest rate environment. But we're now in a lowering interest rate environment. And of course, what's happening? more people coming into the marketplace to get their property as well. So another macro factor affecting capital growth. And then supply rates. So the supply rate is low. Jason and Andy talked about what's happened with a lot of our construction companies. There's not a lot being built. So again, we've got the supply and demand issue, more demand than we have supply. So at a macro level, all of those are affecting property prices, and that we're in an environment of massive growth. But let's move then to the micro factors. Now, we like to say here at Positive, it's as easy as PI, P-I-E, population, infrastructure, and employment. So let me go through each one of those. And so first of all, population. We're in an era of population growth, but what cities or regions are growing in population? Feel free to put it in the chat. I can only see one of the many chats today, so I can only see Chris and Sonia and a couple of other people answering here, but put it in the chat. What cities are seeing population growth? And they could be, feeder cities, capital cities. So where we see population growth, we know we're going to get capital appreciation. What about infrastructure spend? So where the government is spending money on infrastructure. So yeah, that's right. We've got infrastructure spend in Brisbane, big way. That's right. Cross River Rail, hospitals, roads. We've got, Coomera connectors, all sorts of tunnels going in. So Melbourne, we've got a really big expansion, like underground train system that will be coming in. There'll be lots and lots of infrastructure for roads, hospitals, education. Sydney, same thing. And then a lot of our feeder cities are also getting that infrastructure spend. Now, infrastructure spend by the government is a number of things. It's where the government is saying the population is going to grow and they need this infrastructure. So there's a hint. It's also where the government is spending money on wages. So there's employment growth from that. And after that fact, then we can take advantage and piggyback on the wonderful infrastructure that is available in that area. So infrastructure spend, very, very important indicator of where you're going to get some good capital growth. And next, we've got employment. We want employment growth, but in multiple sectors, not just in tourism, not just in entertainment or mining, or, we've got to have multiple areas for employment growth. And you'll see there's places like Springfield in Brisbane that's getting, technology hub. We've got north of Brisbane getting an innovation hub. We've got lots of that clusters of those areas in Melbourne being developed. And so where we see lots of opportunity for employment and lots of industries growing in employment, that's another trigger for where we know there's going to be capital growth. So we can start to narrow it down to the cities that we want to be in. But then we want a niche. And this is where we want to outperform the rest of the market in that area. So if you think back to those the migration that's happening, we're bringing in a lot of skilled migration and skilled migrants and a lot of people with money. Where do those people want to buy? So things like master plans or near hospitals and train lines, or where we've got access to airports, all of those infrastructures help with the niche areas that people want to move to. So that brings us down to what particular properties do you need in your portfolio? Well, I can tell you, when you've been listening to us, you'll know that we've been showing you more properties than you could ever purchase, but what's going to make sense in your portfolio? So we want something that you're going to have for the long term. And if you think about the Olympics, that's quite a long time away, but it's only after the Olympics that Brisbane will then be on the global awareness. So we've got to have a long-term plan, but get in as the time is right for us. So guys, that's just a little idea about how to look for capital growth. It's something that we do every day here at Positive Real Estate, and we love to chat about it. And it's lovely to then talk about specific examples and what it is that particular example brings to the table. So capital growth, really, really important. We can't save ourselves wealthy. We definitely want to be in that capital growth category and make sure that we're building our wealth for the long term. Well, guys, that's it from me this morning. I hope that everybody is going to have a wonderful, wonderful week. And I look forward to chatting with you all in person. All the best, everybody, and happy Monday.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.